Okay, good morning, afternoon, evening, trader friends. This video is one of the most important analytical observations FRIAR has had. FRIAR'S algo, technically correct, but fundamentally wrong. Over the past 4 or 5 weeks, multiple tickers in our watch list, SPY, NVIDIA, SOX, EWY, EWJ, have been generating bull trend signals, sell put signals and bull call spread suggestions. Technically, the oscillators were firing. Contextually, every one of those trades was disqualified before it reached tier 2 of the doctrine decision hierarchy. The reason is the Hormuz divergence model. With Brent around 108, 110, the Treasury 30-year at 5.121%, a Beijing summit that produced nothing of substance, a Fed chair on day 1 of his tenure. These are not noise, these are structural regime shifts, and our algo cannot encode them. So the result, 0 trades were taken on the technically bullish signals, thus 0 losses. The discipline held. Here, FRIAR explains why that was the correct outcome. Not luck, not caution, but deliberate application of FRIAR'S 3-tier hierarchy. Okay, this slide explains the architecture of the decision hierarchy that protected FRIAR'S book. It's not just intuition, it's not just experience alone. It is a deliberate rules-based hierarchy with a clearly defined override sequence. Tier 1, fundamentals. This is the geopolitical economic macro filter. For example, currently, the Hormuz divergence model, the yield environment, the structural commodity picture. When tier 1 says no, the trade does not proceed. Full stop. Tier 2 doesn't get a vote. Tier 2 is the ALGO signal. FRIAR'S system includes some EMAs, MACD histograms, stochastics, divergence signals, momentum, and importantly, several indicator columns. This is the technical confirmation layer. It is powerful and reliable in the right regime, at the right time. In a regime shift environment, like we have currently, it is a lagging indicator of a reality that Tier 1 already knows. Tier 3, entry precision, where we check live delta, the bid-ask spread, the midpoint identification, strike selection, and structure sizing. This is execution. It only runs after Tiers 1 and Tiers 2 have both confirmed. The critical point, the hierarchy is not a suggestion. During the past 5 weeks, Tier 1 held veto over QQQ, SPY, NVIDIA, SOX, the Korean ETF and the Japanese ETF. The algo was irrelevant for those tickers. This is the system working correctly. When Tier 1 vetoes, Tier 2 doesn't get a look in. The algo cannot model geopolitical causation. It can only reflect price history. Regime shift is a historical price relationships are violated. The algo system signals become misleading. So what the algo saw, technically valid, contextually wrong. We'll run through each ticker systematically. This is the evidence base for the Tier 1 veto that was applied across the board. For example, SPY, bull trend throughout, sell put signals mixed with momentum signals. Stochastics ranging 89 to 100, technically a sell put environment. Fundamentally, 5.1% 30-year yield means the discount rate is rising. Wash is on day one at the Fed, and the long duration equity thesis is under compression, so we didn't make a trade. Nvidia, persistent bull trend, persistent sell put signals, stochastic 73 to 100, price running from approximately $198 to $235 through April and May, a pristine technical bull signal stack. Fundamentally, Nvidia's revenue is concentrated in hyperscalers who are exposed to rising energy costs and tightening private credit. The AI circular financing loop, the analogous to Cisco's vendor financing in 2000, is the vulnerability. The ALGO cannot see this. FRIAR didn't make any trades. SOX. This is the most instructive case we'll cover today. We'll do it on the next slide. The key observation here is the reduced signal frequency. Sell put signals becoming sparse over 4 to 5 weeks. The ALGO's own oscillators were detecting the regime deterioration even as the trend stayed labelled bull. The Korean and Japanese ETFs, both showing bull trend and sell put signals. Both are on the structural bear watch list under the Hormuz thesis. Korea's semiconductor industry faces helium and bromine supply disruption. Japan has 95% Middle East oil dependency, thus 108 and extra Brent is a direct structural headwind for both. FRIAR made no trades. Now this one is interesting. American Airlines. They're in a bear trend but generating sell put on oversold bounces. However, jet fuel is increasing. The price of jet fuel is increasing substantially. As I've mentioned before, American Airlines hasn't hedged, does not have hedging on their fuel purchases. The majority, if not all, other major airlines do hedge their fuel costs. American Airlines have not, and it's still going up. So a sell put at these energy prices is not a trade, it's a technical trap. The oversold bounce does not change the structural reality. American Airlines is just fundamentally must go down. And funnily enough, Palantir, with that loopy CEO, is where the algo and the thesis converge. Palantir is the exception, the one ticker where the technical analysis stack and the fundamental thesis are pointing in exactly the same direction. Bear. This is what sparkle looks like in a bear thesis. Algo and fundamentals aligned. The data from Palantir algo is unambiguous. Bear trend sustained throughout. Momentum stacking continuously from the 29th of April onward. Stop loss signals firing from the 29th of April through to the 15th of May. A continuous 12-session sequence. Bearish divergence confirmed on the 13th of May. RSI sequence declining from 39 to 37 to 35. MACD -8 and deteriorating. The fundamental thesis: Palantir is a highly multiple speculative technology stock. It trades on narrative and multiple expansion. In a risk-off macro environment, $108 plus Brent, 5.1% 30-year yields, failed Beijing talks, institutional tolerance for duration and equity collapses, high multiple tech is the first to be repriced. What we're waiting for, a technical bounce to about $138 to $142 resistance, which will allow entry into a bear called spread at a favourable credit. The stop signals tell us the bear trend is confirmed. The oscillators tell us the bounce is not yet done. We wait for a diamond signal, the highest conviction entry in the doctrine hierarchy, before we pull the trigger. The SOX ETF. The algo begins to sense the regime shift. This slide is very interesting because it shows something unusual. The algo is actually beginning to detect what the macro was already screaming. So January through February, classic bull trend, stochastics 83 to 100, sell put signals firing cleanly. The semiconductor complex looks strong. Late January, MACD histogram still positive, but momentum negative readings start appearing. Early warning. February through March, signal frequency drops markedly. We're seeing sparse sell puts rather than consistent entries. April, momentum negative is dominant. Watch signals appearing in signal 2 column. In May, bull trend maintained on the surface, but stochastics fading from peak levels. As of May 15, the momentum signal is showing accelerating. The surface looks bullish. But here's the analytical insight. The frequency drops is the algo's oscillators detecting regime deterioration before the trend label changes. The algo is whispering what the macro is shouting. It senses the current change. It just cannot name the cause. The fundamental reality is precise. Bromine, Israel's ICL group at the Dead Sea supplies approximately 30% of global bromine, which is required for semiconductor creation. Can't be replaced. It's now under direct threat as Iranian ballistic missiles have struck within 35 kilometers of ICL's Negev extraction complex. Helium, mentioned many times, Ras Laffan supplied, past tense, approximately 30% of global helium, and has been offline since the 2nd of March 2026 following Iranian drone strikes. It's been destroyed. It's not coming back online for 3 to 5 years after peace has been declared and things can start to happen, which will be several months after any peace is agreed to. Both these inputs are essential for semiconductor fabrication. Combined with $108 plus Brent, raising data center energy costs and AI infrastructure stress from rising financing costs, the SOX fundamental picture is unambiguous. The algo is sensing it. We are waiting for the label to flip and our diamond signal to flash. NVIDIA, technically pristine, fundamentally exposed. NVIDIA at $225.30 on the 15th of May, stochastics at 73, bull trend, sell put signal. The algo is not broken. This is a genuine, technically valid signal. And I want to be clear about that. We are not dismissing the algo. We are recognizing that the algo is correct within its domain. And that domain does not include the causal mechanism that I'm about to describe. The AI circular financing parallel in this analytical frame here. NVIDIA's revenue depends on hyperscaler capex. Microsoft, AWS, Google. Those hyperscalers are funded partly through private credit markets and equity issuance. At 5.1% 30-year yields, the cost of that finances rises meaningfully. The circular loop, NVIDIA revenue feeds cloud build-out, feeds more NVIDIA orders, becomes more fragile at the margin. This is precisely the Cisco 2000 dynamic. Vendor financing that looked like organic demand until the credit cycle turned. And be aware, I'm sure you are, that private credit industry in the US is waiting for that last straw to break the back. The energy cost transmission is more direct. Data centers are electricity intensive. $108 plus Brent feeds through to natural gas, which feeds through to power generation costs. Hyperscalers operating margin compress. Future NVIDIA order volumes are revised downward. This is what FRIAR means by the C variable, causal mechanism that connects the geopolitical event to the price outcome via a non-obvious transmission path. The ALGO sees NVIDIA rising and says sell put. It cannot see that the price is being partly sustained by the same leverage that Hormuz is unwinding. NVIDIA goes on the bear watch list. Entry condition, MACD histogram turns negative and label trend flips. Not before. The QQQ leap from January 27 is the clean liquid expression of this thesis in the meantime. So NVIDIA, we wait. Okay, why algo models fail during regime shifts? 3 academic frameworks provide the theoretical grounding for what FRIAR observed empirically this week. I want Trader Friends members to understand these are not decoration, but as working analytical tools. Farmer and French's multi-factor models in 1992 and 1993 published peer-reviewed papers that gave us the 3-factor and 5-factor frameworks are built on historical price relationships. Those relationships establish the statistical foundations that most algo systems, including FRIAR'S, draw upon. The critical limitation: these models assume a degree of regime stability. When the underlying economic regime changes structurally, as it has with Hormuz, with the bond market, the shift in Fed leadership, the model's assumptions are violated. Signals that were reliable in the prior regime become noise, or worse, positively misleading. George Soros's reflectivity theory from the Alchemy of Finance book he wrote is directly applicable. Soros's insight is that market prices feed back into fundamentals. Perception shapes reality. During reflective turning points, technical signals derived from those prices can become self-reinforcing in ways that obscure the underlying structural break. The algos see NVIDIA rising and generates a buy signal. It cannot see that the rising price is itself part of a feedback loop, that the macro shock is about to break. The signal is technically correct and directionally incorrect simultaneously. And Brunemeyer and Pedersen's 2009 paper on market and funding liquidity is the mechanism paper. When multiple independent risk parameters breach institutional thresholds simultaneously, yields, energy prices, geopolitical risk, portfolio manager's risk structure compels correlated de-risking regardless of their individual fundamental views. This is required by their institution's risk management requirements. No negotiation. That's the mechanical cascade we're anticipating. And Jesse Livermore said it best, the tape tells the truth, but often it's not the whole truth. Okay, this slide is FRIAR'S active book, Thesis versus Signal Alignment Status. I'll let anyone that's interested to put it on pause and have a look and ask any questions that you may have. And this slide, the discipline that saved FRIAR'S book, I'll also leave. I won't read through that. We're getting pretty long in the video. Do read it. I'm just trying to provide some. This is how I used to teach at university for many years. Okay, this is some courses I taught were specifically to follow what's happening in the geopolitical world and how the financial markets react. Was a class that I taught at numerous universities as an adjunct professor. Okay, so please read it. The other thing I want to say, Charlie Munger said, the big money is not in the buying and selling, but in the waiting. Study.